companies. But the lone bright spot will be that cement demand has been reasonably supportive. Now, the street expects around 8 to around 10% year-on-year demand growth for the past quarter. Fallen commodity prices like steel, well, that helped demand recovery from the infrastructure sector during the quarter. That should further accelerate in the second half of this year. Now, Kotak expects 11% year-on-year growth in terms of volumes, which will be led by Shree Cement, Nuvoco, Dalmia, Ramco, as well as Ambuja Cements. They're all up for you on the screen. The problem was that cement prices were weak, as prices corrected by roughly around 4% on a quarter-on-quarter basis. Though it was monsoon season, well, this correction in terms of pricing was sharper than what we have seen in prior monsoon periods. The other reasons for pricing weakness is due to the rollback of the earlier hikes, as the government focus turned to curbing inflation after the price hikes were taken in April 2022. North, well, we saw the sharpest decline out there. There was a price correction to the tune of around 7 to around 8% on a sequential basis. However, the quarter ended on a positive note, as we saw some price increases towards the end of the quarter, particularly in the eastern part of the country. And higher input cost, well, that will result in a sharp knock-on margin. So two factors playing out: lower prices as well as, higher input costs. Jefferies estimates that the industry unitary EBITDA will fall by around 350 rupees per ton sequentially in the past quarter. And from the top names, well, majority of the top line will be led by higher volumes, while the remainder will come in from higher prices. What stands out is the sharp contraction in margins that will be seen in all companies in the past quarter. This, as the high-cost raw material inventory will gradually get utilized. The second quarter FY23 is expected to be weak, so the street is bracing for it. But the hope is that quarter 3 FY23 EBITDA will improve big time, as petcoke prices, which constitute bulk of the fuel mix, well, that's corrected by around 20 to around 30% from its peak. Though thermal coal prices, well, they continue to remain elevated. Now, since it's post-monsoon, cement price hikes as well are likely to begin to take shape. Additionally, the street hopes that construction activity picks up. That will keep the off-take momentum going as well. Another benefit for the coming quarter will be that there is unlikely to be a volume push by ACC and Ambuja this time around. Remember, their closing for the year has been changed. Normally, it is in December. It's moved to March this after Adani took control. Finally, we leave you with a valuation chart of all the companies on an EV upon EBITDA basis. Back to you.
Okay, thanks a lot for that. Very helpful. And